Hello everyone, I'm Andrew McNair from SWAN Capital with our October 2020 SWAN report. In this month's video, we're going to discuss what news and headlines have been influencing the market lately, and I'll provide you some perspective on what these developments may mean for you over the next few months ahead. Now stick around for the disclosure that comes after this video. So stocks dropped in September as investors worried about stalled fiscal stimulus talks in Washington and the upcoming election, along with the debate debacle and new coronavirus cases in Europe. There's been lots of headlines to unpack, so let's get started. The S&P 500 index lost nearly 4%, while the NASDAQ actually declined just over 5%, and the Dow lost 2%. After a strong rally that we saw in August, investor sentiment turned negative really quickly as we saw a drop in tech stocks that dragged down the entire market. The month had a few bright spots on the other hand because a slight pickup in buyout deals and a progress on a COVID-19 vaccine gave the bull investors some cheerful news that they've been looking for. Now the market cut its deep losses as September came to a close. And that was surging on the final 2 days of trading as really legislators appeared to reopen the fiscal stimulus talks they need to be having. And in a challenging year, one sector that we really want to focus on in today's video is housing, which has seen an uptick in consumer demand. And that's partially thanks to lower interest rates from the Fed. And home building and home sales have set new records in recent months, with home builder confidence at an all-time high. And we've seen that here locally as people have moved from New Jersey and New York. But housing accounts for 15% of the nation's GDP, or gross domestic product. So investors will be watching very closely on this sector to see if it's going to retain its momentum into the fourth quarter as well as 2021. Now, if we look at jobs, on Friday, the September jobs report missed expectations for new job creation with only 600,000 jobs added versus the expected almost 900,000 jobs that we expected to be created. However, the unemployment rate came in at 7.9%, beating the estimated 8.2%. But in normal terms, if you think about it, 200,000 job difference would be horrendous. In a post-coronavirus terms, it doesn't seem to make a big deal. It seems better now for investors to focus on the decline in unemployment rate. And I think we need to be careful as investors to not just focus on all the positive data. I mean, that's still 800,000 people that are lining up each week for new unemployment benefits. On a net basis, we did create 600,000 new jobs, but it should have been expected that job gains are going to only continue to slow down. And why do I feel that way? It's because when the economy was shut down, literally overnight, we saw a flood of new jobs return when things started to open up. But as we see differing policies between states, we're going to see, as we move forward, a slowing jobs market. And that's because these low-hanging fruit jobs that were picked initially aren't there anymore. So we're going to still be adding numbers, which can be seen as a good thing. We're going to still need to have some help from Congress. Speaking of Congress, the elusive deal or no deal saga on Capitol Hill continues. Senate Republicans moved up to $1.6 trillion with their offer, while House Democrats passed a $2.2 trillion package. That's $600 billion apart. I mean, we're light years apart from getting a deal if we're $600 billion apart. But seriously, with the CARES Act funding running out very soon, the employment situation, as we discussed, and the economic slowing may just be the ticket to spur both sides to finally move towards some agreement on this relief that the country needs. And last week's announcement from Disney, the airlines, and other firms totaled over 100,000 in layoffs and furloughs, which really won't bode well in the months ahead without Congress's help. Now, with the Federal Reserve on the sidelines for now, the onus is squarely on the shoulders of Congress in making a deal for a fiscal stimulus package. Now, the good news, last week, Congress did fund the government into December, and we averted another potential crisis on that front. But as we turn our focus to the election, I mean, if you were not watching, you were probably thinking to yourself, is it a debate or a debacle? The much anticipated political collision delivered over 2 hours of bruising free-for-all, but really not answers on policy And then if the news wasn't filled with so much things to talk about after the debate, Trump tests positive along with a lot of people in his administration with the coronavirus. And the market is watching how the leader of the free world is actually progressing through the illness as well as the First Lady. So our hearts and prayers do go out to the administration. We hope for a speedily recovery. That's it for this month's October 2020 SWAN report. Now, none of this is a recommendation, but if you'd like to discuss your personal financial situation, please give our office a call at 850-380-9558. That's 850-380-9558, and we'll be happy to talk to you more.